What's going on, everybody? It's your boy Drew IQ. Welcome to Winners Win Finance. Today we'll be talking about the 5 different stocks you can purchase in the market. Please hit the like button for the YouTube algorithm. Make sure to subscribe as well. And without any further hesitation, let's get right into the video today. Alright guys, so the first type of stock we'll be talking about that you can purchase in the market is going to be a value stock. Now, a value stock is simply evaluating the company's financial spreadsheet and comparing that to the current price per share that is on the market. Now, some of the different type of financial ratios that you will be looking at when investing in a value stock is going to be 1, the price to earnings ratio, as well as the price to books ratio, as well as the enterprise value to EBITDA ratio. Now, we aren't going to be going into the specific details of each one of these financial ratios, but if you would like me to do a video specifically on those, leave a comment below and we can go ahead and do that in the future. Alright guys, so the second stock that you can purchase in the market that we'll be talking about today is going to be a growth stock. Now, with a growth stock, specifically a growth stock, you're going to be worrying more about the price to sales ratio, you're going to be worrying about the revenue growth, and you're going to be comparing the enterprise value to sales ratio. Again, we're not going to go too into detail on these specific ratios, but one that you specifically want to focus on when considering a growth stock is going to be the revenue growth. I consider anything with a 10% or more revenue growth to be a high quality growth stock. Some are even growing over 20% revenue growth, but for me, anything at least 10% is a great growth stock to buy. Pretty much, I guess the thing that you want to worry about when you're looking at a growth stock is less about the earnings and more about the sales, and is this company expanding, how fast they are growing, right? We don't even care about the profit margins we're getting after expenses. How fast are we selling product? And how fast are we expanding this company, right? I think a great example would be Tesla, right? Early Tesla was growing so fast. They were building, new Model 3s every day. It seems like expanding across to new countries every other day. It was absolutely insane how fast this company was growing, right? So yeah, if you really want to get into, fast growing portfolios, growth stocks are definitely something to add to your portfolio. Alright guys, so the third stock we're going to be talking about today is a dividend stock. Now, a dividend stock is personally one of my favorite types of stocks to purchase, mainly because a dividend is going to be kind of like a paycheck that you could get every quarter to annual in passive income. Passive income meaning mailbox money, money that you're making in your sleep, right? So that's my favorite type of income. Pretty much everyone can agree with that, right?
Oh my God! Wow!
Now, let's talk about the actual companies you're going to be investing in, right? A lot of these companies are going to be more mature. They're not going to offer a lot of growth potential. And because they don't offer a lot of growth potential, that is why all the cash they make, that you're going to pay to their shareholders, right? Now, a good example would be Coca-Cola. Coca-Cola is an extremely huge brand, right? How much bigger can they actually get? They don't offer that much more growth potential, like I'm saying, right? But there's still a great company that a lot of people like myself want to invest in. So I personally have a lot of Coca-Cola stock, and they pay me quarterly, and I think I've been getting maybe like 40, 50 bucks a quarter, but that adds up really, really fast. And I just keep reinvesting my dividends back into that company, and over time it really starts to add up, right? And I think another great example would be AT&T. AT&T is another dividend stock that I've been investing in for years and years, as a lot of others out there in the finance world. AT&T though, if you look at it, over like 5-10 years, the stock will go from maybe about $28 to max $40, $38 area, right? There's not much room that it goes back and forth, So it's one of those stocks that you're not going to really get a lot of money just based off growth, like I said, but it is a great company just to have in your portfolio because you're going to get those dividends, and the more dividends, the more money you're going to make in passive income, the more money we make in our sleep, and we love that shit, right? Alright guys, that brings us to our fourth stock that we'll be talking about today, and that is a penny stock. Now, a penny stock is just that. It trades for pennies on the dollar, right? Extremely cheap, which is why they're very common, right? An easy entry price, right? Who wouldn't want to just spend a penny and turn that into $1 million? It sounds great, and a lot of day traders will trade this idea that you can make millions of dollars off day trading. Personally, myself, I started investing in the stock market with penny stocks. Shout out to Timothy Sykes and all those guys, great people. But personally, I ended up losing a lot of money, and I stopped buying penny stocks after about a month or two and just decided it wasn't for me. They are essentially just really high risk, high reward. So you could, make $1 million, or you can lose $1 million in a day. It is extremely high risk, like I said. A lot of these companies are not mature companies. Probably never heard of them. They don't even have a brand. Maybe no funding behind them, and they might just be in the negatives on all of their financials. If you wanted to bet on penny stocks, I personally would not purchase them, and I would do puts or shorts. We're not going to talk about short selling, but if you were going to get involved with penny stocks, I would invest in that. But if I had to give you my personal advice, I would stay away from penny stocks. Just don't touch them, guys. Just go ahead, get into the market. Please don't, get FOMO, don't get fear, just buy AMC. But I think you should start with maybe a dividend stock. Look at AT&T right now. I think they're a good price to buy. And just get your hands dirty in the market. Please do not buy penny stocks. Again, I gave you this warning now. Don't buy penny stocks. You will probably lose money. Alright guys, and the last type of stock that we're going to be discussing is a blue chip stock. Now, a blue chip stock is very commonly debated in the finance world, and it was a term that I heard as a young investor and had no idea what it was, but I continually heard blue chip stocks. You should invest in blue chip stocks. But what the hell is a blue chip stock, right? Well, a blue chip stock is just a name for a high quality, strong brand that is going to be around forever and has been around already for a very long time. I think they're very similar to dividend stocks, more mature companies like Coca-Cola, right, like we talked about earlier, Johnson & Johnson, AT&T, just companies that are more mature, less growth opportunity like we discussed with the dividends, and they are kind of considered safer long-term investments. So a lot of long-term investors will say they like to invest into blue chip stocks. And when they say blue chip stocks, it's just companies that are going to be around forever, that pay dividends, that are not going to go down anytime soon, and they're not going to go bankrupt anytime at all. So, it's real simple, but I still wanted to, discuss it because you will hear about this term a lot in the market, especially in the finance world, and just know that it's a term for a great company, and that's all you need to know. But with that said, that'll be all for this video. Please, like I said, like, subscribe, and leave a comment below for any ideas that you would like me to cover in the future. And drink some runners, boys.